What's up, guys? So one of my favorite things about being a CPA or a virtual CPA is I get to work with traders all across the US. And one of the most common questions I get is, can I save by trading within an LLC or a limited liability company? So the short answer is yes. So I'm going to be addressing this topic throughout this video, so keep it locked. So if you're new to the channel, I wanted to welcome you. So for those of you that don't know me, my name is Brian Rivera and I serve many hats. So I'm an entrepreneur. I run my own tax business, Trader Tax CPA. I'm also a brand new homeschool teacher. So my kids are performing virtual school now, so I get to do that as well. I'm also an active day trader. So I trade the financial markets just like some of my clients do. And I'm also an active member of the Army Reserves, where I currently serve as the rank of Major and been doing that for about 14 years now. So I'm getting pretty close to hitting that 20-year mark. All right, so part of the reason why I'm pretty knowledgeable on this topic is, well, one is trading is one of my passions, and it's also something that I've helped hundreds of clients across the US navigate, and that is the complex tax code and figuring out ways that you can save from a tax perspective. Now, I know a lot of times you will run across things on the internet where it's somebody's opinion or it is somebody's thought that you could do something a certain way. But a lot of times they will disclose a disclaimer and say, hey, I am not a professional, go seek advice. Well, thankfully, this video, you are getting it straight from the horse's mouth. I am a CPA and I specialize in day trader taxes. So my goal is always the same for all of our clients. And that is, one, pay your fair share of taxes, and two, see if we can save some money and putting it back in your pocket. Everybody wants to strategically leverage the tax code so that way they can minimize the bill that they have to pay to Uncle Sam. So if you're in a similar position to many of our clients, I'm going to give you guys the lowdown of one of the simple strategies we use to help save from a tax perspective using an LLC type structure. So a particular client comes to mind where, you know, he's a Florida-based trader, and he spent a couple years, maybe the first 4 or 5 years, experiencing a ton of losses. And so as he progressed in the markets, he slowly scaled that strategy to where, you know, he would kind of rip off a few profitable years to where he was able to kind of soak up some of his previous losses. Then what happened was, you know, year one, it was, you know, he would rip, you know, 40, 50,000, and the next year was 100,000. And then now he's all the way up to about $500,000. So the thing I love about trading is that once you find an edge and you find what works for you and you scale it, the earnings power or the roof is unlimited. And it's awesome to see guys who where it takes time to get to that point. And that's kind of where we came into play to see what we can do to help this guy. And the cool thing about having a sound tax strategy is that it's fluid, right? So what happens in year one is not necessarily the same that what happens in year 3, 4, and 5. And so that's why it's extremely important to always nurture the relationship you have with your CPA or with your client, so that way you can adjust fire as things happen, you know, in a given tax year. So, you know, like we're in the middle of COVID-19, and a lot of people have experienced a lot of things that have been traumatic, you know, to their personal finances. So it's always important to have a fluid tax strategy. All right, so the first thing we did is we got him incorporated. So we followed an LLC in his home state, which happened to be Florida, right? So what the LLC does is it legitimizes your trading business and it helps reduce audit exposure. So if you look at the stats, typically a business or the audit rates around businesses are a lot lower than that of an individual. And so if you're in a situation where you have maybe a job or you have a business and you have multiple things going on in your tax situation, a lot of times it makes sense to segregate your businesses. Like I know me, for an example, I have a CPA firm, my spouse has a law firm, I have a trading business. Everything is in separate LLCs, so that way everything is one, it's separate of our individual returns, and two, the businesses are separate of each other, which reduces audit risk and also legal liability. So the other thing the entity does is it allows for a late mark-to-market election. So if you want to become a mark-to-market trader, it's a two-step process to where basically there's an election statement, and then there's also a Form 3115. Well, when you create a brand new taxpayer, you can actually elect it after the date. And so in my client situation, Once he used up all of his capital losses, we then created the entity to elect mark-to-market going forward. And what mark-to-market does is it actually protects you, right? So if you have a year where you have a massive loss or a big loss, you want to be able to recognize that loss in that year on your tax return. So the next thing that we did was we actually changed the tax status of his LLC. So an LLC can be taxed 3 different ways. It can be taxed as a single member LLC, which is a sole proprietorship. It can be taxed as a partnership, and it can be taxed as an S corporation. So what we did was we changed his status to an S corporation because the S corporation does a couple things, right? So by default, trading income is not earned, it's capital. And so to unlock some more benefits, you have to create earned income, and the S corporation is the only entity that does that. Now, how you do that is you pay yourself a base salary. Now, once you pay yourself a base salary, you get to unlock what's called the solo 401k contributions. Now, what happens is you can contribute up to $57,000 of trading profits in a given tax year to that plan. And because you're a day trader, you can continue trading that income tax-free, which is it's almost a double bonus. One is you're not paying tax on a portion of your earnings, and number 2 is you're now exploiting tax-free growth, and then you're building up your nest egg when it comes time to retire. All right, so the other thing that we did was we took advantage of the self-employed health insurance contributions. So the other caveat is it's very similar to the solo 401k plan is you have to pay yourself a base salary through the S corporation. So to deduct your self-employed health insurance premiums and the cost of health insurance, you actually have to do the same thing as you do with the pre-tax plan, right? So for anyone who is an entrepreneur or self-employed knows that the cost of health insurance when you're not covered by an employer is pretty significant. And so as a day trader, that is also something that you want to take advantage of. The other thing we did was we made sure we optimized his business tax deductions by looking at his spending habits and things that we could capture from a business perspective. So what I'm going to do is I'm actually going to link a blog post below to our website to where we outline probably the top 20 to 25 business deductions that active day traders take. So let me know in the comment section below if there's any deductions that you guys are taking that you potentially have a question about, or you want to see if other people are also taking advantage of that. All right, so now that we've assembled all the pieces to this particular client's situation, we created the LLC, we elected S Corp, we took advantage of pre-tax contributions, we took advantage of health insurance premiums, and we also took advantage of all the business deductions he was incurring as an active day trader. Things such as the home office deduction. All right, so once we assembled all the pieces to this particular person's tax strategy, we incorporated him, we got the S Corp election, we took advantage of the mark-to-market election, we paid the base salary to make sure that we maxed out the solo 401k contributions, took advantage of the self-employment health insurance, and we also maximized the deductions he was taking as a day trader. Prior to this tax solution or this tax plan, he was looking at roughly a tax liability of about $76,000 on about $300,000 of trading related income. So that's an awesome year. So once we assembled all the pieces together, we actually were able to reduce his tax exposure to about $56,000 just using a few of the strategies that we employ for a lot of our day trading clients. Now, if you take a step back, could you imagine just how much money my client could have been missing out on if he did not have a sound tax plan? It's almost like a good trade, right? Imagine if one of your trading buddies was like, hey man, I just turned $3,000 into $20,000. You would say, man, that was an absolutely sick trade. I mean, that's a huge win in terms of percentage gains, right? It's the same thing from a tax perspective, except for what we are doing is we are putting the tax savings back into your pocket. I think it's a win-win trade every single time, and that's why it's always important to maintain that relationship with your CPA or your accounting firm. All right, guys, so I want to make sure I make myself very clear in that the entity structure is an amazing tool for traders to leverage the tax code. Now, I'm going to say this also is that it is not a one-size-fits-all approach. Every single trader's facts and circumstances are different. So what works for one trader in California may not be the same thing for a trader who is in Texas. So that's why I always recommend to reach out for a consultation, you can consult with our firm. I'll leave a link below, or make sure that you are working with a CPA firm that specializes in day traders. Day traders have some of the most complex tax situations out of all the different professions in the world. So just make sure that you are working with somebody who is specialized in this area. Do not recommend going at this alone. So the other thing I want you to remember is that entities are a great tool for traders who maybe you're part-time to where you qualify for trader status, but you have another source of income like a W-2. Or maybe you're a trader like me who has another business, but also meets the criteria to qualify as a trader. So the entities are very good for people who, may have multiple sources of income. And what it does is it consolidates your trading activity to a separate return, and you'll just get a K-1 that goes on the individual tax return. All right, fam, so I want to thank you for your undivided attention. I hope you learned something, and I hope that you can see how an LLC could potentially save you some money come tax time. So if you enjoyed the content that we're putting out for the trading community, feel free to give this a like, give it a subscribe, and give it a share, and we'll continue to put out content that can benefit traders when it comes to tax time. Have a good one.